Hi there, this is Rob, and this is the 2-minute overnight overview for Monday. I have a close call to review from Friday and some interesting research, so let's get to it. Looking at the odds sheet, you can see the number of the index securities we track were meeting the minimum criteria for a possible long trade on Friday. This is evident when the averages column appears in green. ES is the security I trade and the one I pay most attention to when considering whether to take a position. As we approach the 4 o'clock close, ES was actually posting odds strong enough to consider a long position, but some late selling caused the odds to shift and in the end failed to meet the minimum criteria. We observed all of this happening in the trading room. Our studies didn't show a whole lot, although there was some mildly supportive evidence provided by the research showed in Friday's 2-minute overview. Overall, the evidence appeared to lean bullish, but it wasn't quite convincing enough to entice me to take a long position. One reason for that was the seasonality was weak. This meant I'd be going for a lower target amount of 5.5 points. I'll take a trade with a 5.5 point target and an 11.5 point stop when odds appear strong, but I don't like that risk-reward setup when odds are borderline, so I sat out. Now let's take a look and see how the night played out. After closing at 14.05.5, ES wiggled around without getting too far into positive or negative territory. At its highest, it was up 5 points, which would have just missed my target. In the end, ES gapped up a very mild 1.5 points, so I missed out on a winner, but not much of one. Let's take a look at the daily chart, and I'll share some research for tonight. As I produce this video, you can see that ES is in danger of closing at a 2-month low. I created a study to examine all instances where ES closed at a 40-day low, but above the 200-day moving average. Stats here appear to strongly favor a gap up the next day. 27 of the 39 instances have seen a gap up, and the average gaps up have been nearly twice the size the average gaps down. This leaves us with a fairly gaudy profit factor of 4.5. Here's a quick look at the profit curve. With the intensity of the edge has not always been consistent, the profit line has always been sloping upwards. Some of you may recall that I showed a similar study using a 20-day lows a few weeks ago. Today in the trading room, I'll do a detailed comparison between the 20-day and the 40-day low studies. Thanks for listening. Have a great day and rest easy.